We continue with accounting. We're going to activity 3. So, at 31 December 2018, Michel's ledger for his soap making factory contained the following balances. We have plant and machinery for 50,000. The provision for depreciation was made for 22,500. Provision for depreciation will definitely go to your depreciation account.
Okay.
But before that,
You can make two
we
accounts.
have what?
Make two accounts.
Yeah, you're going to open ledger for depreciation,
Okay.
which the balance will stand as 22,500. But before then, let's read the additional information. During the year ended 31 December 2019, the following transaction took place. On the 31st of March 2019, Michel exchanged part of his machinery for more modern equipment. That is trading. He received a trading allowance on the old plant of 7,000, and the balance of 2,000 was paid by check. That was done. Then the old plant cost 13,000 when it was originally purchased. That's the cost of the old assets. That's 13,000. The depreciation is at 20% per annum using the reducing balancing method. So the first question says, prepare the plant and machinery account and the provision for depreciation account. So we start with plant and machinery account.
Again, the old plant cost 13,000.
Yeah, 13,000.
When it's original.
That's the old equipment.
Okay, what do you do with the 20%?
With the 13,000?
Yeah.
No, you don't have to. The 20.
Oh, okay.
No, you only work on the final balance
Okay.
of equipment after the transfer.
Okay.
So your plant and machinery account, we have a new machinery now. Machinery.
Oh, okay.
So the plant and machinery account on the debit side, you're going to have the balance of the equipment, which is 50,000. Then there is a bank payment for the new plant, which is 2,000.
Yeah.
The balance was paid, and there's a trading of 7,000.
7,000. Okay.
So the total cost is 79,000.
Okay.
The total cost is 79,000 for the new machinery.
Mm-hmm.
But remember, the value for the old machinery cost was 13,000. So on the credit side of your plant and machinery account, you're going to have the transfer of the old plant, which the value is 13,000.
Okay.
So the value of the new plant will be the old plant minus the total value of the new plant, which is 59,000 minus 13,000.
Okay.
So our balance now is 46,000. So the balance carried down.
It'll be 46,000.
46,000. So on the debit side of your plant and machinery account, you're going to have the balance brought down for 2020.
Okay.
2019 is down. So the value of machinery in 2020 is 46,000. Clear? So now, the 46,000 is what you work on depreciation on.
Mm-hmm.
So depreciation is reducing balancing method of 20,000. Do you get that? So 20,000 minus 46,000. 20% of 46,000 minus 46,000.
Yes.
That gives us 9,200. 20 multiplied by 46,000 divided by 100. That's 9,200.
Okay.
That's our 9,200. I think that is clear.
Yeah.
So the value for depreciation will be 9,200 minus the 13,000. Let's say 13,000 minus 9,200, which is 46,000. Sorry, 46,000. No, 9,200 now. 46,000 minus 9,200. That's 36,800. Multiply by 20%. That's 6,800. That's 46,000 minus 9,200. 36,800 times 20 divided by 100. 7,360. So that's supposed to be 7,360. For depreciation is 45. Okay. We have our value for depreciation. We have the balance for provision for depreciation is 22,500.
Mm-hmm.
So 20% of that, 20 multiplied by 22,500 divided by 100. That's 4,500. So depreciation is 4,500 on the provision made for depreciation. So you add them together, you minus whatever you get from the balance. So 4,500 plus 9,200, that's 13,700. So 13,700 minus 22,500 gives us the balance carried down for provision for depreciation. So the provision for depreciation will be 13,700 minus 22,500. That's 8,800. So the balance carried down is 8,800 for provision for depreciation. So that goes to our disposable income, our disposable account.
Disposable account.
So for disposable account, we're going to have two equipment. The new equipment on the debit side and the old equipment on the credit side.
Okay.
So the new equipment that is being transferred, is being disposed, is 13,000.
What year? 31 March?
2020, yes.
Okay.
Then the plant and machinery, the value of the plant and machinery, the trade in now is 7,000. It will be on the credit side.
Okay.
Get the point here. The equipment is sold. Disposed equipment is gone. But how much is being paid? The total value for the equipment is 13,000. That is when you purchased it.
Okay.
But when you are disposing it, the value you disposed it was 7,000.
Okay.
So that's 7,000. Now, your provision for depreciation is 9,200, which we have already. Where is the depreciation? Provision for depreciation on disposal.
Okay.
Depreciation on disposal is 9,200. So you had it
Okay.
to 7,000. So it gives you 16,200. Then that means you have made more
Yeah.
selling that asset than the carrying value.
Okay.
So this is 16,200. The carrying value for the asset was 13,000.
Yeah.
So 16,200 minus 13,000 goes to your statement of profit or loss.
Okay.
So your statement of profit or loss will now have 3,200 as profit.
Okay.
This is an income now. It is income. What do we call it? Operating income.
Okay.
Operating income. Operating income. 3,200 profit.
Okay.
Are they being the credit side is more than your debit side? That is a loss. It will be considered as expenses.
Okay. Perfect.
Is it clear?
Yeah.
So that's about activity 3. So go to activity 4. For activity 4, are you there?
Yeah.
They said, on 19 June 2018, Fatima purchased a new machine for a textile factory. The following are the payments made by her relating to this purchase. Cost of machine 42,000. Let's trade discount. There's a discount given. A trade discount is discount on purchases, yeah, for 4,000. So delivery cost incurred is 3,100. Installation charged 5,200. The annual maintenance charge is 1,300. I said, show what amount is to be used as the total cost. So the total cost is the machine cost minus trade discount, which is 38,000.
So total cost is
Delivery is part of the cost, 3,100. Installation is part of the cost, 5,200. So the total capital expenditure, this is called capital expenditure. Capital expenditure is 46,200. So the first answer is 46,200.
okay.
You won't calculate annual maintenance charge because that is considered as revenue expenditure.
Okay.
Is it clear? Is it clear, please?
Yeah.
Now they said prepare the ledger.
You know what is the total account recorded in the machine?
What is total cost recorded in the machine account? Yes.
Yeah, we did that. Right.
It's 46,300.
Okay. And then I prepare the ledger account.
Now, it said prepare the ledger account for the new machine for the years ending 31 December 2018, 2019, and allow depreciation of 15% per annum on reducing balance method. So we have 2018 and 2019 depreciation value.
Yes.
So for the plant and machinery account, the value paid into the bank by check is 38,000.
Yes.
So your plant and machinery account, you received machinery through payment to the bank.
Yeah.
So the bank is 38,000. Do you get that?
Mm-hmm.
The amount on delivery is part of the expenses, 3,100. Then installation is 5,200. So the total is 46,300. I think it's clear. So on the credit side of your plant and machinery account will be 46,300,
Okay.
which is the total of equipment.
Yeah.
I think it's clear.
Yeah.
Now, the depreciation, question 3 now. They said prepare the ledger account for depreciation. So for depreciation, we have 46,300, which is the value of the assets. 46,300 is the value of the asset. So 15% of 46,300 is 6,945. That is for 2018.
Yeah.
Are you with me, please?
Mm-hmm.
So depreciation of the value of the asset. The worth of the assets now is 46,300, which we're going to make depreciation on. Depreciation of 15,000 or 15 over 100 multiplied by 46,300.
Is this not the carrying value?
The carrying value.
Yeah.
This is the carrying value now.
This is the carrying value.
Now, no, this is depreciation.
So this is the carrying value.
This is
But
this is depreciation. This is depreciation, this is depreciation. When you add this together, it gives you accumulated depreciation.
Okay.
So year 1 depreciation, year 2 depreciation, addition gives us accumulated depreciation. That goes to your depreciation account.
Yeah.
So depreciation for the first year is 6,945. 6,945 minus the value of assets for 2018 is your depreciation for 2019.
Okay.
So 6,945 minus 46,300 gives us the value for 2019. So the two depreciation values we have for 2018 is 6,945 and 2019 is 5,903.25. So that takes us to provision for depreciation account. So for provision for depreciation account, it will be year ending 31 December 2018 and year ending 31 December 2019.
Yeah.
So on the debit side, you have our balance carried down for 2018 and 2019, and on the credit side, we're going to have the value for depreciation for year 1, the value for depreciation for the second year, which is accumulated depreciation.
Yeah.
So your provision for depreciation, 31 December 2018, balance carried down is 6,945. 31 December 2018 is depreciation. The value for depreciation is 6,945. You know, the provision for depreciation is an expenses. In your statement of profit or loss, it goes in the debit side. In your provision for depreciation account, it will be on the credit side.
Okay.
Do you understand? So provision for depreciation now on the credit side will be 6,945 for 2018, December 31, 2018.
Yeah.
Then the balance brought down will be for 2019, which is the same value, 6,945. Now in 2019, we have the value for depreciation, which is 5,903.25. So you add them together, that is the accumulated depreciation for 2019. So 2019 we have 2018 plus 2019, so which is 12,848.25. That will be our balance carried down for 31 December 2019. So in January 2020, so the accumulated depreciation goes to 2020, which is 12,848.25.
Okay.
That is for 2020. Now the last question says, assuming now, is here, this is it. It said, assuming that Fatima decides.
4, Mr. This is 4.
Yeah, sorry, question 4.
This is 3.
It said, assuming that Fatima decides to use a straight line method for depreciation of 10% per annum, what would the charge be for depreciation in the year December 31, 2018? We know for a straight line method, it is fixed.
Yeah.
So that means the amount charged in 2018 will be the same amount charged in 2019.
Yeah.
Yes or no? So what we have the value for the asset is 46,300. The 10%
Mr.
of
Why
it,
is it not 59,000? This one.
5,903.
Yeah.
No.
No. Yeah.
They said 10% of the asset.
Oh,
The worth of the asset is 46,300.
Perfect.
46,000. If you are supposed to use straight line method, this is what you use. But we're using reducing balancing method. That's why we use these two. So for the straight line method, we have 10% of 46,300. That gives us 4,630. So if it was to be 2019, or if it was to be straight line method, both in 2018 and 2019, we're going to charge the same value, which is 4,630. Is it clear? So that ends activity 3,
4, and 4.
and 4, right?
Yeah.
For chapter 6.